So the president has signed the one big, beautiful bill. It's now an act, July 4th, 2025. And we're going to talk about how the final version of this impacts retirees or those that are close to retirement. What's the impact for the people listening to this podcast? That's what we want to talk about today. Let me bring in my co-host, Tony Shore. Tony, welcome to the show. I'm sure you've heard that the president signed the one big, beautiful bill. Now, I think it's called the One Big, Beautiful Bill Act. There it is. For those watching on YouTube, they can see the link to the actual bill that was passed and read the text if you want to read it yourself. If you don't want to read it, like my kids don't want to read, they just want sound bites. That's what we're going to do today, Tony. We're going to do sound bites.
Who doesn't want to read an action-packed 948-page congressional bill? Who doesn't want to read that? Stephen King, move over.
I only picked out the things that I think are relevant to retirees or people close to retirement. So there's certain things in there that we're just not going to talk about because
sure
it doesn't impact. Although there are some huge impacts here on certain economic changes that are going to happen as a result. But I'm not going to get into it. I can't. We don't have enough time. Let's just say that. Okay. So we did a show on this already on the House original version. You can watch that there. And at that time, I said I was going to invite Trump on to the podcast, and I did get a call back from him. But I do want to point out there are some things in here that we're going to talk about. So the senior bonus is the biggie. I'm going to talk specifically about that. But there's some other things that are buried in here that, unfortunately, not many people were aware of. Not as many positive changes as I wanted. I'm not high on this bill. I'm not completely against it, but anyway.
Yeah.
You ready to talk about it, Tony?
Yeah,
I'm gonna play.
definitely. I'm interested to hear your take and what's actually in it. I mean, I've heard it's funny because, you turn on one channel, news channel, and it says one thing, and you turn on another news channel and it says another. And I'm like, what's actually in it? What does it actually say? That's my
And then how does that impact people?
Right. How does it impact me? How does it impact my friends? How does it impact seniors? That's the question.
All right. Well, let's get to it, and I'll see if I can bring up my voicemail from Trump to share with everybody.
Oh yeah, you should play that again. I can't believe that. That's amazing.
It makes permanent the Tax Cut and Jobs Act of 2017 when Trump passed. So this is a big one, and this is probably the biggest, and it gets lost in the Medicaid and other stuff. This is it, because this makes my life so much easier. It makes retirement planning a lot easier, because now we have these tax tables. Is it going to go from 12 to 15%? Are we going to see no? These tax tables are now set. So we've made permanent the Jobs and Cut and Jobs Act tax tables, which people aren't going to feel. But what we need to remember is they were going to expire at the end of 2025. So 2026 was going to see a huge tax increase across the board, but now those are gone. So it's kind of like, let's just keep what we have. You don't feel as good about it, right? Because there's no pain. It's kind of like automatically deducting your 401k from your paycheck. You don't feel it. You almost have to stop deducting it to actually feel it. But anyway, I think this is the good thing. I think this is good for retirement planning, especially retirees, especially for most retirees who don't have a lot of income at the higher tax brackets. The 12% is where most people fall. And I think that's great. And the other part of that Tax Cut and Jobs Act was the standard deductions. Remember how we used to all itemize before 2017?
Yeah.
I don't think I have many. I have very few, I would say. I have a few, but very few clients that still itemize. Most people take the standard deduction.
Right.
And that was increased. So they increased it by $750 per person. So now it's $15,750 for a single person, $31,500 for married filing jointly. It's indexed to inflation, so that number is going to go up every year.
Nice.
I think this is great.
Yeah.
It simplifies it.
I love the standard deduction. It simplifies things, and it really helps people. It lowers taxes for a lot of people.
Yeah.
And it really helps the middle class, that standard deduction, I think, the most, which is one thing I like. Um, I don't like tax cuts that just help the wealthy, and it's been painted as that, but the standard deduction really, I think that helps the middle class more than anything. But then they've added to the standard deduction for those 65 and over, haven't they?
Yes, we'll get to that.
Okay.
There is an extra deduction for if you're over 65, which they have now. They've continued that. So that's going to be a nice, but there's a bonus on top of that, but that's different. I'll get to that.
Okay. Okay.
Well, another thing that people, and this is going to be something that doesn't necessarily help middle class for sure, and that's they've increased the gift estate and gift tax exemption. It was 15 million. Now it's 15 million for a single person, 30 million for a married couple in 2026. That's a lot of money, right?
Yeah.
The problem was this. I don't like estate
You're
taxes. I
you're
don't
just
like
gonna
the
squeak
concept.
under that, Dan, for you and your
Yeah,
family.
right,
That is,
right.
your kids will just
If if you're squeaking on the, and what people don't realize is you can give away $1 million in a year. You're not going to pay tax on it. This is lifetime limit, right?
Mhm.
And people think, oh, it's 18,000. I can give away 18,000. No, you can give away 1 million. You're not going to pay taxes. You just have to file forms. So the IRS is counting. Are you getting close to that 15 million as a single person?
Mm.
But they've indexed this for inflation as well. So basically, what they've done, because these were going to get cut in half at the end of the year too. So again, this helps people plan, but for most people that are watching the show, it doesn't impact them, right? But I just wanted to point that out. This is another way, a bonus to help people plan for this.
Right.
I don't like estate taxes in general, so
Mhm.
anything to eliminate those, I'm happy with.
Agreed. 100% agree with you on that. Don't like estate taxes. I'm glad they raised it. It doesn't really help the average person,
Right.
but you'd be surprised. Estates can add up quickly if there's a business, if your family
Business.
owns a small
Absolutely.
business, or even farms. It can add up quickly.
Farms,
So, yeah.
small businesses, you might own a chain of little stores.
And might
Um,
be nothing liquid like farms. When farmers
oh, yeah,
leave their
right.
farm, like my dad inherited a farm from his dad, and it's just like it's all in equipment and land. There's nothing
Land,
liquid.
right. Right. So you either have to sell the land to pay the taxes, or, I inherited a couple of buildings. I'm getting rent and it's not making me a millionaire, but now I have to sell the building to pay the taxes because the building value is worth.
Yeah.
Again, I don't like it. But anyway,
Right.
that's in the bill.
Yeah.
Charitable deductions. So you can add, they added an additional 1K per person that you can donate, non-itemized. So this would be on top of the standard deduction. We used to, in order to get the charitable donations, when they stopped itemizing deductions, the theory was charitable donations were going to go away because you can't get a tax write-off anymore because you're not going to donate more than the standard deduction, most people, right? So even those that are in that standard deduction now, which is most people, like 90% of people, you could still get a charitable deduction in addition to that for 1K. So that's nice. It's a good way to continue to give to charity. Another thing that's helped business owners close to retirement, the 20% pass through deduction is still there. That was supposed to go away. So this is going to help small business owners. If you're not a small business owner, you're like, oh, I hate that. But just remember, um, small business owners aren't necessarily rich. They run small businesses. They might be making a good living, but this is helpful to them. I like this, but for the most part, it doesn't impact retirees because they don't own a business anymore. This is for the people that are selling their business or running their business,
Right.
getting close to retirement. Um, HSAs, health savings accounts. I had high hopes, Tony. In that previous show, I talked about all the cool things. They were going to double the amount you could put into the health savings account. Senate said no. So it came back, passed the bill. There's really no big changes to the health savings accounts.
Mm.
Nothing to speak of. The only glimmer of hope in that is now, starting next year in 2026, they're opening HSA compatibility to any bronze level Affordable Care Act plan. So it used to have to buy a specific HSA plan.
Right.
In Florida, for instance, the big carrier, there was probably one or two health savings account compatible plans in the entire state for a lot of regions. So if you wanted a health savings account, you had to get this plan. But there might be 15 bronze plans that weren't HSA compatible. So what they've done is they're saying, if you get a bronze plan, you can get an HSA plan. Very, very nice. I like it. It opens it up, the HSA, to more and more people. I think the idea of doubling the HSA was great, but when you do the math, only the wealthy people are using it because most people can't afford to put money in an HSA. Although I think that
And leave
everyone
it
should.
sit until retirement and then start
Right,
using it.
right.
Right.
I've done shows on how that's the greatest tool ever. I still believe it
Yeah.
is, but I'm
That's
hoping that it gets to the point where you don't need a health plan. You
it's
just
the only
have,
account with a triple tax benefit. It's the only
right,
account in the IRS tax code with triple tax benefit.
right. It's a deductible Roth, for lack of a
Yeah.
better term.
Yeah.
And I think I would love to see them just open up a savings account that you don't have to use for health. You could use for anything that's tax deductible. But again, so I said, there now that, so now here's the thing, and I'm gonna bring my voicemail that we have that I want to share with everybody, but there are a bunch of temporary changes, and these are the ones everyone's touting and saying so great. We got deduction, no tax on tips, overtime, auto loan interest is deductible, the SALT, state and local income taxes, bonus deduction, which I mentioned already, for older, 65 and older. But these are all temporary. So
Yeah.
all this, oh, these are great, great, great. No, let's not forget that this is a temporary thing. Let me bring in, let me listen.
Hello, Dolphin Financial Group. It's you know who, the best. Believe me. I got your invite to join your retirement podcast. A fantastic show. Really tremendous. Very good, folks. I love it. I do. But I got to decline politely because my schedule's packed. Nobody's got a busier schedule than me. Also, I'm not retiring anytime soon, despite what the radical liberal left is saying, those losers. I don't want to discourage people from planning their golden years with you. Now that I think about it, I might give you the phone number of certain people in Congress. They need to retire. Get them out. Maybe you can help some of those so-called fake news people retire to keep up the great work. Your clients are winning bigly in retirement. They must be so tired of winning. A great podcast. Make retirement great again. Dolphin Financial Group. That's what they're doing. Give me a call back soon. I'd love to chat.
Yeah, so that was not Trump. That was my friend who did that for me. But I just want to say that. But
That's
let's
funny.
pick on
That's a
Trump a
great
little bit here.
imitation, though. I thought it was Trump at first. I did.
Yeah, me and him haven't talked in months. No, so these are temporary changes, and Trump was touting these as a great thing. But again, Congress passed it, but we're looking at short term here. And I see, oh, it's a victory for people to not pay tax on tips. Fine, but for how long, right? 2028. So let's start with the state and local taxes, which a lot of the conservative people on the media will say this is only helping the super liberal states. And no, but whatever. 40,000 is the new limit. So it was up to it was at 10. So now you can write off 40,000 in state taxes, local, and that increases by 1% through 2029. But then in 2030 it goes back to 10,000. So we're kicking the can on that one. But I think what they did is they basically bought votes for 5 years, right? Or 4 years,
Right.
or whatever, 5 years, right? So I think, what are we
So
doing
how does
here?
that help people? I don't get it. So
Okay, so let's say, Tony, you live in a super, super liberal, high tax state of Minnesota.
let's just say,
Oh,
for example, I lived in Minnesota.
As an example, and you pay a bunch of local and state taxes,
A
$20,000,
veritable crap ton.
right? And let's say you pay 20,000 as a retiree in a wealthy neighborhood or something.
Uh-huh.
I don't know, and you also have to pay federal taxes. So what SALT does, it allows you to say, I've already paid 20,000 to the local government. Let me take that off, so I don't have to pay taxes to the federal government for that first 20. And that was only 10, but now it's 40,000 that you could do that. So if you're paying 40,000 in state and local taxes, that helps you because you don't have to pay that to the federal taxes.
So the
It's kind of like double dipping.
40,000 comes off my taxable income each
Right,
year.
right. The 40,000 that you pay, if you pay and prove that you pay it to state and local taxes, then you can get that deduction from your federal. Right? So your
Okay.
tax bill goes down because you've already paid tax on local. But what a lot of people say is, well, that's your own fault for living in that high tax state. You shouldn't pay any less to the federal government because you're paying so much to the state government.
I see the argument.
So,
And is
right?
that for
So,
everybody, or is that, are there age?
yeah, that's for everyone in the country. But for
Okay.
most people, they're not getting there. They're not using. I think in Florida, I think it's like 7,000 is the state and local tax on average. But states like Massachusetts, New York, Minnesota, California, they have higher taxes. So this helps them, right? All right, let's talk about the biggie, the bonus deduction for age 65 and older. Again, this is temporary, only until 2028. We got 3 years of this. And this is the compromise because we were supposed to have no tax on Social Security. We did a show on how great that would be, right? But this is going to be a $6,000 deduction on top of the standard that you get for the next 3 years. And that's you said, now I'm not going to pay taxes. But what are we talking about here? We're talking about $500, 15%. It's not huge.
It's not a
right?
game changer.
It's a lot less of a tax loss for the government to do this than it is to not tax Social Security. Not
Right.
taxing Social Security would be huge for
fewer
retirees.
people will have to pay taxes on Social Security though because of this, right?
No. Well, okay. So you get a deduction. So yeah, a little bit of your Social Security might lower you, so you don't have to pay all into Social Security. Not all of it will be taxable, but it's really not helping. It's helping the lower income people. It's phased out at 75,000 in modified adjusted gross income, or 150 for a married couple. So this isn't going to benefit someone that's making 200K. It's benefiting the lower or middle class.
Yeah.
So I like that part, and I like the fact that it's less taxes because I'm all about that. I didn't wear my taxation is theft shirt, but this isn't really doing much, and it's only 3 years. So I feel like this is a little don't pay attention to the man behind the curtain nonsense.
Yeah.
Right? I think it's a distraction more than anything. I'm not going to say it's bad. This helps retirees or people 65 and older, but it's I'm not overly excited about it, Tony.
Sure.
As everyone, this is great bonus. And it's only 3 years. So what's going to happen in 3 years? Get it out. So anyway, I think a lot of people are over glorifying that $6,000 bonus. Medicaid and food stamps have added requirements. We did that in the last show. We talked about that. They've raised the age now to 64 instead of 57 or something. So you got to prove that you need it to work. You have to prove you can't work all the way up to 64. So I think that this also has got a lot of misinformation, blown out of proportion. People are going to die. People are going to lose, blah, blah, blah. No, it's just changed the requirements for Medicaid and food SNAP program. It's going to be an issue, though. It's going to be an issue for a lot of people. But for a majority of the people listening to the show, it's not going to impact them in a negative way because they are retiring. They're probably not on, especially if you're on a fixed income from Social Security. A lot of times that Social Security alone bumps you above the Medicaid or state level. So, but again, it could impact a lot of people with very low incomes. So, and the bonus deduction is not going to help them. The SALT is not going to help them because they're already at a low income. So this work requirement is trying to eliminate fraud and waste, I believe, But in the growing pains in the beginning, when people are doing paperwork and such, yeah, it's going to cause some most issues. Now, to wrap up, Tony, there is some health subsidy issues. We did that in the last show. I'm going to do a new show based on what's going to happen to the Affordable Care Act subsidies, because that's going to be the biggest impact on people in retirement that are not yet 65. I really think that that's going to have a huge issue. And I want to dedicate a new show. Once I figure out what the rules are, we might have to wait to see what the insurance companies do. But overall, the One Big Beautiful Bill, it's an official act. It reduces taxes for many, basically by just extending those Tax Cut and Jobs Act cuts, made them permanent. That's the biggie. Don't forget that. The standard deduction, it's a biggie. I'm so happy that those have continued, because I didn't want to see tax rise for everybody, especially the middle class.
Right.
The other changes are mostly temporary, so don't be fooled by them. That's my key takeaway. Love the tax reductions and the Tax Cut and Jobs Act permanent. Don't love these temporary changes. It's smoke and mirrors to delay some time and get the bill passed. That's where I'm going with it. I try not to get political. I got my friends obviously put the Trump thing out there. I'm not supporting, the ridiculous way that this bill passed with such a divide. I'd love to see much more bipartisanship, but then, no one's happy. I don't think anyone's happy with this. I don't think anyone's happy with the big, beautiful bill, which means that it's probably good, right? If one group is really happy with it, if any one group is seriously happy with it, then there's a problem. It's when everyone's kind of like, then that's probably the best thing for us.
Sure.
So,
compromise is usually good in government. It helps the people more than all one way or the other, right?
Exactly. So things have changed. Now you could start planning. If you haven't already planned, now we could start talking about Roth conversions for real. Now we could start talking about healthcare subsidies for real, because now we know what the tax rates are going to be. It was really unknown. It was really difficult to plan when we didn't know if the tax rates were going to change or not.
Right.
Especially for retirees doing Roth conversions or healthcare subsidies. This is really complex planning stuff, made a whole lot easier now. So now to start going again. It's mid-2025. We're already in the second half. It's time to start planning for 2026 now that we know the rules of the game. For now. For now. Don't know when the rules are going to change, Tony.
Right. Well, it's a crazy thing, and we're hearing a lot about it, and you just need to dig down, get the facts. I think you did a good job, Dan, of explaining some of the more important pieces today. Yeah.
Permanent tax cuts, temporary little gimmicks. Start planning. You got the marching orders. Start planning. Talk to your CPA. Talk to your financial guy, and figure this out. Now's the time. Tony, thanks for a good show. We'll catch everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.